business liability, and taxation. Presenting today's webinar is Nellie Akalp. Nellie is a passionate entrepreneur, business expert, professional speaker, author, and mother of four. She's the founder and CEO of CorpNet.com, and a trusted resource and service provider for business incorporations, LLC filing, and corporate compliance services in all 50 states. Before we begin, I'd like to cover a few quick items. First, this webinar will be recorded, and we'll be sending a link to the recording and the slide deck to all participants in a post-event email. If you want to follow along now, you can download the slide deck and follow along by going to the downloadable slide deck tab below. This webinar session will last an hour, and we set aside time for Q&A after the presentation portion has concluded. So please submit all your questions using the Ask a Question box on the left. If you're having audio issues, please make sure that the volume slider within your webinar portal is turned up and on. If that doesn't fix the issue, then please reach out using the Audio Tech Help tab. Lastly, we do have a closed caption feature below if you'd like to follow along with a live transcript. So with that, I'd like to bring on Nellie to begin her presentation. Nellie?
Hi, everyone. Thank you, Cody. Hello, everyone. Happy to be here today. Thank you to all the folks at SCorp for humbling me and honoring me with this opportunity. Again, my name is Nellie Akalp, CEO and founder of CorpNet.com, and today we're going to be talking about limited liability companies and basically doing a deep dive into the LLC, what an LLC is, and when you as a business owner should consider forming that LLC. So without further ado, I want to kind of jump right in here. Cody did a really wonderful job giving you a little bit about my background. I am an entrepreneur. I think entrepreneurship was born inside of me. I'm a serial entrepreneur. I'm a disruptor. And what I love about entrepreneurship is that you can take it anywhere you want to go with it, and sky's the limit. So I went to CSUN, California State University, Northridge, received my bachelor's degree in business administration with an emphasis in marketing. And after that, I met my husband and current business partner. We went to law school together. I'm a lawyer. I don't practice law. And right out of law school, I decided to launch my first document filing service, which fast forward to 2005, grew to doing nearly $1 million in gross sales revenues. At that time, we were acquired by a publicly traded company, and we decided to step down because, again, entrepreneurship at its core is born within me. So when I got acquired, kind of lost its entrepreneurial spirit for me. So I decided to step down, focus on my 3 then growing children, and in 2009, I realized I was too young, too passionate, and frankly, too bored to take on an early retirement. So I decided with my husband again to start CorpNet. Here at CorpNet, we provide the most comprehensive, cost-effective services when it comes to anyone, whether you're an entrepreneur, whether you're a professional business owner representing other clients, whether you're a lawyer, an accountant. We provide comprehensive, cost-effective services to help you start a business, manage a business, and keep a business in compliance. With that said, our goal today is how does someone who wants to start a business consider what type of business entity structure is best for their particular type of business? And we're going to be focusing on the limited liability company, which is one of the types of business structures that really gives you the best of both worlds. You get that personal liability asset protection, but without all the formalities. So filing an LLC really provides that small business owner some of the advantages of incorporating your business and placing your business into a corporation and operating your business as a corporation, but without all those formalities that often go along running your business as a corporation. So we want to talk about what is an LLC, LLC structuring options, when and where to file your LLC, options for creating the LLC, and of course, compliance requirements. So let's do a deep dive of the LLC. What is an LLC? Simply stated, an LLC stands for what is called the limited liability company. A limited liability company is a business structure that is formed under specific state statutes. You form the LLC by drafting what are called articles of organization within the state that you're planning to run your business. It is a formal business structure, and however, it's very simple in its form and how you maintain that business structure. The way I like to define the LLC is that you get the best of both worlds. You get all the benefits of liability protection, asset protection that normally comes with operating a business as a corporation, but without all the heavy paperwork and compliance formalities. We often call the LLC a hybrid of a sole proprietorship partnership and a corporation, because in many ways it's very similar to running the LLC as a sole proprietor, specifically for those who are a single business owner and want to own a single member LLC. And it's also similar to a corporation in that the LLC comes with asset protection, liability protection. It is a separate legal business entity from its owners. However, the owners, which are called members of the LLC, dictate how that LLC is going to be managed and also dictate how they like that LLC to be taxed. The main benefit, as the name suggests, is that by running your business as an LLC, you are protected against, God forbid, anyone coming after you. So you get asset protection, liability protection. The other advantage is that profits are taxed as personal income, and this is usually lower than what corporations pay. Now, let's talk about the benefits of forming an LLC. Very simple to form. You're afforded personal liability protection. What do we mean by that? Well, an LLC is considered a separate legal entity from its members. So its financial and legal responsibilities are also its own. So God forbid, if somebody comes and sues the LLC, as long as that LLC is being complied with and being run in compliance with state laws, whoever is suing the LLC can really go only to the extent of what the LLC has as assets. Another great benefit of the LLC is financing and credit. Financing can be easier to obtain because the LLC is a formal legal entity with known assets and obligations. The LLC is also very flexible in the way tax treatment options play in here. By default, an LLC is considered a disregarded entity for tax purposes, so income tax is applied in the same way as it would be whether you're a sole proprietor or partnership. And also there's management flexibility in that an LLC may either be managed by the members or it can be managed by a manager. So there are two types of LLCs that we'll get into, which are called member managed LLCs and also manager managed LLCs. Now let's talk a little bit about personal liability protection. Personal liability protection, and basically when you form an LLC as a business owner, what is it that it's actually protecting from a personal standpoint? Well, your LLC's debts, actions of LLC owners and employees, your own actions related to the business, and other members' personal debts. At the end of the day, simply stated, when you're forming an LLC, and if that LLC is formed and with the intent of running the LLC in compliance with state laws, you're not only getting protection within the LLC or by running your business as an LLC as far as a creditor or a vendor or whoever is trying to come after you personally, but you're also liability-wise protected as well, in that they can't hold you as one of the members of the LLC liable for the wrongs that have been conducted by the LLC itself. So at the end of the day, if that LLC is in compliance and running in compliance with the state laws of that state, and someone gets a judgment against that business, which is an LLC in its structure, they can only go after the assets and the assets and whatever money is within the LLC to get a judgment against that LLC. Now, let's talk about briefly the tax advantages of an LLC. And for those of you listening in, I just want to, again, apologize that I'm kind of going through this so fast because there's so much to cover here. And at the end of this presentation, we'll have a little bit of time for Q&As. So with that said, let's talk about the tax advantages of an LLC. When one forms an LLC, it depends how many people are forming that LLC. By default, if one member is within that LLC, meaning one person who wants to start a business and wants to form that business as an LLC, that LLC by default is termed a disregarded entity for tax purposes. And what that means is that as a single member LLC, and by default being regarded as a disregarded entity, by default, that LLC is taxed as a sole proprietorship. On the other side is if you have multiple business owners who are forming an LLC, the LLC with multiple members by default is termed as a partnership. And by default, it's taxed as a partnership. However, with an LLC, you also have the option, members of the LLC also have the option to elect taxation as an S corporation if they qualify and meet the requirements that are afforded to an S corp, or they can elect to be taxed as a C corp. However, by default, single member LLCs are taxed as a sole proprietorship. Multi-member LLCs by default are taxed as a partnership. However, the tax advantage of an LLC is that you as members of an LLC can also be taxed or elect to have the LLC taxed as a S corporation or a C corporation, depending on where you are with the business, with taxes, your tax bracket structure, etc. Now, as I mentioned to you, because of this hybrid nature of the LLC, and if it's a single member LLC and by default that single member LLC is taxed as a sole proprietorship, the member of that LLC cannot be an employee of that LLC. As such, the LLC's business profits, because the LLC is a single member LLC and because by default it's taxed as a sole proprietorship, the profits of that LLC are subject to Social Security and Medicare taxes. This may create an unfavorable financial situation for that LLC owner. So really what I'm trying to say here is at the end of the day, although an LLC may be beneficial for that business owner because that business owner doesn't want to deal with so many paperwork and administrative work and formalities, members of an LLC that are taxed as a sole proprietorship cannot be employees of an LLC, and by default may be subject to higher self-employment taxes. Why? Because we talked about how a single member LLC by default is taxed as a sole proprietorship. As such, that member cannot be an employee of an LLC and take a paycheck. The only way they can pay themselves out of that LLC is by taking a draw. And by taking a draw, they're subjecting themselves to higher self-employment taxes. Now, let's talk about the different LLC structure options. As I've mentioned to you, the LLC, which stands for Limited Liability Company, it can come in many forms. You can have one person forming the business. That's really what we call a single member LLC, or you can have many members within that LLC, which is called a multi-member LLC. Um, in addition to the LLC being a single member versus multi-member, the LLC can also be member managed versus manager managed. You can also have domestic LLCs versus foreign LLCs. Let's say, for example, you have an LLC that you formed in California. So I live in California, I formed my LLC. However, my business is starting to do business in New Jersey and Florida and Texas. I need to foreign qualify that LLC in those states that I have nexus in, that I'm doing business in. As such, the home state LLC will be termed a domestic LLC, whereas those LLCs that I'm forming in those other states that are not my home state are termed as foreign LLCs. There is also the LLC versus the PLLC. So the LLC is for any type of business owner who wants to start a business and put their business into an LLC to receive asset protection and liability protection. However, there is an exception to this rule. What about professionals? What if you're a lawyer? What if you're an accountant? What if you're a doctor? What if you're an orthopedic? What if you're an anesthesiologist? Certain states have certain rules as to licensed professionals who practice a profession that they have to get have a license from the state board. So for those classes of people that are licensed professionals, they can form an LLC, which is really called a PLLC. A PLLC is a professional limited liability company, and it's for a person who carries a license and is offering or practicing a profession that requires a license from a state board. Now, not all states recognize PLLCs, and for those states who don't recognize it, then the small business owner or the practitioner can still form either a professional limited liability partnership or a corporation, which we will save for another webinar. For the purposes of this webinar, I just want to differentiate the two as to what is an LLC versus a PLLC. And really what a PLLC is it's exactly an LLC, but for a professional. Now, let's talk about single member LLCs, which I think I've done a good job of explaining it to you. And let's do a review. Again, single member LLC is one person having full control over the company. Management is by that single member. That single member is really protected with its personal assets. However, that single member may be held personally liable in situations where there is fraud or unpaid debt. And oftentimes, as a new LLC, a creditor may ask that LLC member to sign as a personal guarantor. Now, let's talk about income tax treatment. When I talked to you guys about a single member LLC, again, what I mentioned was as a single member LLC, by default, the IRS looks at the LLC as a disregarded entity, and for tax purposes, that LLC is taxed as a sole proprietorship. Now, that sole proprietor, that LLC member, by default is being taxed as a sole proprietor. At the same time, that sole proprietor can say, no, I don't want to be taxed as a sole proprietorship. I want, for tax purposes, for this LLC to be taxed as a C Corp or an S Corp. Now, a lot of you may be asking me, well, why is that? Well, number one is because they want to save on taxes. Because if you recall, I mentioned to you that by default, because the single member LLC is being taxed as a sole proprietor, they can't be employees of that LLC. As such, if they take monies out of the LLC, they can only take it in the form of a draw. And because of taking a draw, that member will be subject to higher self-employment taxes. So for that reason, oftentimes we'll see members of an LLC opt to want to elect to have the LLC treated as an S Corp, or opt for the LLC to be taxed as an S Corp or a C Corp. And the benefit of that, the benefit of either option is that not only they'll save on taxes, but by having that LLC taxed as an S Corp or a C Corp, members of an LLC now can become employees of the LLC and also take a paycheck from the LLC and not be subject to those higher self-employment taxes. Let's talk about multi-member LLCs. Now, as I mentioned to you, with a multi-member LLC, excuse me, with a multi-member LLC, it's basically two or more people forming the LLC. And when you have multi-member LLCs and there are two or more members within that LLC, by default, that LLC is termed or regarded as a partnership, and by default, it's taxed as a partnership. Now, let's say those members all qualify to elect to have the LLC taxed as an S Corp or a C Corp. Again, by doing this, they are avoiding having to take a draw from that LLC, having to be subjected to paying higher self-employment taxes cumulatively. And on top of everything, they can take a paycheck as an employee from the LLC. So with a multi-member LLC, for federal income tax purposes, a multi-member LLC by default is treated and taxed as a partnership unless that multi-member LLC elects to be taxed as an S Corp if they qualify and meet the requirements that are provided by the IRS to meet the S Corporation election requirements. And if they don't, they can opt for electing to be taxed as a C Corporation. Now, we've so far defined what is an LLC, the different types of tax treatment. We've talked about the single member LLC, the multi-member LLC. Now, I'd like to talk to you guys briefly about member managed versus manager managed LLCs. So member managed LLC is used when all members participate in running the business of the LLC. So let's say you have a multi-member LLC with two or more members. As a member managed LLC, which is oftentimes the default way to go in forming an LLC in any state, all the members participate in running the business, hence called a member managed LLC. A manager managed LLC, on the other hand, is used when only certain members, designated non-members, or a combination of the two handle running the business. Most multi-member LLCs choose the member managed LLC as it is the default option with any state. And most states consider an LLC to be member managed unless specified on the company's articles of organization that they would like the LLC to be treated as a manager managed LLC. Also, for manager managed LLCs and LLC's articles of organization, as I mentioned, they have to specify that it will operate as a manager managed LLC. So if the operating agreement does not specifically specify that, that LLC by default will be operated as a member managed LLC. So some of you may be asking, well, what if I made a mistake, and what if I formed the LLC as a member managed LLC because I didn't specify, and then I really needed a manager managed LLC? Nothing to worry about. What we would typically do in that situation is file what are called articles of amendment to amend the articles of organization and specify within there that we now want this LLC to be uh, managed as a manager managed LLC. So nothing to worry about there. As I mentioned to you, another thing that I want to cover is domestic LLCs versus foreign LLCs. Again, domestic and foreign in this context refers to the state where the LLC is created. So if I form an LLC in the state of California and I live in California and my employees are in California and my servers are in California, then that LLC is the home state where that LLC is going to be formed. So California is my home state because I live here. Now, let's say I expanded my business where not only I'm doing business in my home state of California, but I'm also doing business in Tennessee and in New Jersey, which we do. We do business in all 50 states. So what we have to do, because we have nexus in those states, and what do I mean by nexus? Nexus means that I'm doing business in those states. I'm having transactions in those states. I have employees in those states. So those are all terms that we use to create nexus within those other states. So as a result, because I have nexus in those states, my home state LLC is, which is California, is now going to foreign qualify in those other states that I'm doing business in. And in those other states, my LLC will be called a foreign LLC, whereas in my home state, it's called a domestic LLC. I'm going to briefly, again, revisit the LLC versus PLLC. Again, the PLLC stands for Professional Limited Liability Company, and these exist in states that require LLCs composed of state license holders to use this category. So again, it's in all aspects, it's the same as an LLC, but really what a PLLC is that all the members of that LLC have some sort of license, and the LLC is being formed for the professional practice, for example, of medicine, and the members of are doctors, or the LLC, the PLLC is being formed for the professional practice of law, and all the members of that LLC are lawyers. So with a PLLC, the members have to hold that same license in order to be members within that LLC. And because they're practicing a profession, it has to be formed as a PLLC, as long as the state recognizes PLLCs. Now let's talk about S corporations versus LLCs and how they differ from each other. So a lot of you may be wondering, well, I know that I can form a corporation and elect to be SCorp, and also I can, form an LLC and elect SCorp. But what's the difference? I'm confused. Why would somebody want to form an LLC and then elect S corporation? Why don't they just form a C corp and then elect S corp? And these are all really good, valid questions. And the answer to that, it really boils down to how you want to be taxed as the owners of the LLC, how much responsibility you want to take on as far as paperwork, administrative formalities, and compliance formalities. See, with the LLC, the reason why I term this entity, you get to have your cake and eat it too, it's because with the LLC, the single document that controls the LLC is called the LLC Operating Agreement. And as such, there's really not many compliance formalities. Whereas with a C Corp or a C Corp that's elected to be treated as an S corporation, there's a lot of compliance formalities. With corporations, you have to have bylaws, you have to have minutes, you have to have resolutions, you have to each year, no matter how small you are, hold an annual meeting of the shareholders and the board of directors. With an LLC, that's not the case. And so the question as to why would somebody form an LLC and then have it taxed as an S corp, it's because that small business owner wants that foundation, the foundational structure of that business to be an LLC, so that they don't have to have all those compliance formalities. However, they want that LLC to be taxed as a C Corp or S corporation for tax purposes, and also to be able to receive a paycheck out of that LLC. So really, when it comes to differentiating S corporations versus LLCs, it has to do with ownership eligibility. Eligibility requirements to become an S corporation shareholder are more restrictive than those for an LLC. Okay. With an LLC, anyone can be a member of an LLC, literally anyone. So although both the S Corp and the LLC, again, are pass-through taxation types of entities, and what I mean by pass-through or flow-through, it means that both with an LLC and an S Corp, all the profits and losses trickle down and they're taxed at the member, at the ownership level. You get taxed once. But the difference between the two is that with an S corporation, the IRS does not allow anyone to be a member or shareholder of an S corporation. You have to be a US citizen or a resident of the US, and there are other requirements. With an LLC, anyone can be a member of an LLC. You can be a foreigner. You can be an estate. It could be a trust. Anyone can be a member of an LLC. So for that reason, eligibility requirements to become an S Corp shareholder are more restrictive than for anyone to become a member of an LLC. In addition, to elect tax treatment as an S Corp, an LLC must be a domestic company with owners who are individuals, also certain trusts or estates. Partnerships, corporations, and non-resident aliens may not be S Corp shareholders, because one of the requirements to become an S Corp is that the IRS says you have to be a US resident or a resident alien, meaning having a US citizen or resident alien, meaning having a green card within the States. Other restrictions on S Corps are limit of in the fact that you can only have up to 100 shareholders. So, for example, let's say that LLC qualifies and wants to become an S Corp for the fact that they're either resident aliens of the US or US citizens. The members can only go up to 100. So you cannot have more than 100 shareholders or members within an S Corp or an LLC that's taxed as an S Corp. As far as liability protection goes, both the LLC and the S Corp protect business owners' personal assets. However, a court might rule that an LLC's members or S Corp shareholders are personally responsible for debts and legal issues of the business if they acted fraudulently. Again, we want everything to be run in accordance with the state laws and in compliance with state laws. Now, let's talk about briefly business name. To get paid by the business, the LLC members take money out of their share of its profits, okay? And as I mentioned to you, by default, single member LLC or multi-member, you can take only a draw, okay? Which means you may be subject to higher self-employment taxes and higher, self-employment taxes, which is Medicare, all that good stuff, okay? However, if that LLC elected to be an S Corp or a C Corp, they reduce their tax liability by taking a paycheck out of the LLC. And for that reason, they wouldn't subject themselves to higher self-employment taxes. So to get paid by the business, okay, as by default, LLC takes the draw. However, that LLC who's elected to be an SCorp can put themselves on payroll and take a reasonable salary out of that LLC. Again, as I mentioned to you, both the S corporation and the LLC are pass-through entities. We term it pass-through. Sometimes it's referred to as a flow-through entity. And what that means is there's pass-through taxation with both the S corporation and the LLC. So by default, as I mentioned to you, an LLC is considered by the IRS to be the same tax-paying entity as its owners. Single member LLC default is termed as a sole prop. Multi-member LLC by default is termed as a partnership. So the members are responsible for income tax and self-employment taxes, i.e. Social Security and Medicare on their company's profits. Now, with SCorp tax treatment, if that LLC qualified and elected and the IRS approved their SCorp election request, that LLC can opt to be taxed as an S corporation. And in this case, the LLC members still have pass-through taxation. However, the owners only pay Social Security and Medicare taxes on their wages and salaries from the business. Income taken as distributions is not subject to self-employment tax. I've done a really quick summary here of the different types of business entity structures, starting with the LLC. So I know that these slides will be available to you for download at the end of the webinar, but we've done a really nice job summarizing the different types of business entity structures here for you, what you need as far as forming that structure, whether that particular business entity structure will offer you limited personal liability, whether you can have transferability of interest, whether it offers pass-through taxation, whether it gives you the ability to raise capital, and whether there's a limitation on number of owners. So as you can see, I've highlighted the LLC entity structure for you, in that you can see for the formation of the LLC, there will be state filings required. It does offer personal liability and asset protection. It does offer limited transferability of interest. The duration of the LLC will be ongoing unless formally dissolved or closed down. The LLC is a pass-through entity, and it's a pass-through entity in various different forms, in that multi-member LLCs are by default taxed as sole props. Single-member LLCs, are by default taxed as a sole prop. Multi-member LLCs by default are taxed as partnerships. However, you can also have pass-through taxation by the LLC electing and being approved to be taxed as an S corporation. As you can see, again, you have the ability to raise capital with an LLC, and there is no limitation on the number of owners with an LLC unless that LLC wants to opt and elect to be taxed as an S corp. I am very, very cognizant of the time, so we have a little bit more than maybe 10 minutes here, and then I'll open it up to Q&A. So we're now down to, okay, Nellie, so you've presented what an LLC is, the different types of LLCs, the benefits of an LLC, the tax considerations of the LLC, the different types of LLC. So how do I form this LLC? Where do I form this LLC? When to form an LLC? So those are all the questions that I'm going to be covering in the last few minutes of our time together. So oftentimes I'm asked, okay, when do I form the LLC as a new small business owner? And the answer to that question, it's case by case. If you're starting a business and you know that that business is going to, take off, and you want to limit your liability protection and asset protection, you may want to consider filing that LLC as soon as possible. An LLC start date is not retroactive. What does that mean? Is that the LLC comes into existence when the articles of organization are submitted to the state for filing, and when the state approves the articles of organization and files that LLC, the date they stamp file the articles of organization in many cases is the date that the LLC has been formed. So if you're thinking of forming an LLC and it's March and thinking that you can backdate it to January 1st, LLC filing dates cannot be retroactive. Now, let's say you have an LLC that you have a business and you want to start that LLC and it's November. In that case, unless there is a very, very, very time is of the essence type of issue, most often we encourage you to wait and start the LLC from the beginning of the year, so you do not have to file, two sets of taxes, one for this year, one for the next. I often get the question of, okay, I definitely know that I want to form an LLC, and I've heard Delaware, Wyoming, Nevada, these are really great states to form an LLC. What do you think, Nellie? Here's the rule of thumb, okay? Once you start a new business, you have to choose the state to form the LLC. And if you have a small business, the general norm, the general rule of thumb is to set up that LLC or incorporate your business within that home state where you're living, where you have nexus. Delaware and Nevada are popular options. However, if you're not living in those states, it's highly recommended against you to form in those states. Why? Because you're going to be subjecting yourself and that your business to two states' laws and regulations. And oftentimes, if you're in a state where the LLC is not formed, so let's say you form in Delaware, but you're really in California, California is going to subject you to now foreign qualify that LLC that's in Delaware in California, and now you're subjecting yourself to two states' laws and two sets of tax requirements. So the basic rule of thumb is that if you're a small business owner and you're running an LLC, best to set it up in the state where your employees are, you're living as the member of an LLC, where your transactions are taking place, where you have your headquarters, where the storefront is. Options for filing an LLC. So as I've told you before, as founder and CEO of CorpNet, we provide comprehensive, cost-effective services when it comes to setting up an LLC. We can set up your LLC in any state for 1/10 of what an attorney or an accountant or other business professional would charge. We're also very highly competitive in this industry with the hundreds of thousands of competitors that also offer similar services to us. However, there are options. You don't have to go through us. You can do it yourself by doing all the work yourself, going to the website for the Secretary of State, downloading paperwork, and filing your articles of incorporation or organization yourself. You can use an online legal filing service, such as our company, CorpNet, or you can go and opt to pay thousands of dollars and pay a lawyer to form it, whereby I can guarantee you, because I used to practice, the charges are astronomous, the charges are horrendous, and you don't really need a lawyer to be filing these documents for you when the documents are already provided to you by the state, and you just have to take the information and fill these forms out. So I would highly encourage against that. Save that money and pay a lawyer when you really need legal advice for the business from that lawyer. So those are basically the three different options: do it yourself, a reputable filing company who can assist you with forming the LLC, such as CorpNet, or a business professional. Now, how do I form the LLC? Steps to form the new business as an LLC. First things first, go pick out that name that you want. Make sure it's available in the state that you want to form the LLC. Draft the articles of organization, designate a registered agent for the LLC. Once the LLC is formed, you got to obtain an EIN, which is the social security for the LLC. Draft the operating agreement. If your LLC is also doing business in multiple states, request foreign qualification of that LLC in those other states. Obtain your business licenses and permits. If you're having employees, set up the employer tax account, open up the bank account, and then start operating the business as an LLC, and make sure that LLC is in compliance throughout the term of the LLC. Now, all these steps and more can be handled by a company such as our company, who can do all of it for you without you worrying about any of this whatsoever. And we guarantee that it will be filed error-free. Now, let's say you're managing multiple companies and you're managing multiple businesses. There are ways that you can form that LLC where you have one LLC and multiple LLCs underneath it. So again, if you are a business owner that's running multiple businesses and you want simplicity, there are ways to to create one LLC as a holding company and have other LLCs underneath it, as kind of like trees under that holding company. The other option would be to create an independent LLC for each business. And then lastly, you can have one LLC and have all the other businesses under that LLC operating as a fictitious business name. All different options are available to you, and it really depends on how much you can take as far as management of the responsibilities and how much paperwork and administration you would want. So we're getting down to the end of our webinar, which is how do LLC owners get paid? I've done a really great job of explaining to you guys that by default, with an LLC, if it's a single member LLC, you're taxed as a sole proprietorship, and the only way you can get payment from the LLC is by taking a draw, which will subject you to paying self-employment taxes and income taxes. Alternatively, if it's multi-member LLCs, by default, it's taxed as a partnership, and the partners are taking draws, and then again, their portion is reported on the partnership tax return. Single member LLCs and multi-member LLCs that elect to be filed taxes as a C corporation, all members are considered employees of the company and must receive a W-2. Similarly, LLCs that qualify and elect S corporation status would file what is called an 1120S tax return, with the members receiving a Schedule K-1 form indicating their share of the profits and losses. So we can, dive into this a little bit more during the Q&A session if you have any questions. As far as paying Social Security tax, again, we've put all the bullets in here for you. Sole proprietorships, general partners, and LLC members treated as partnerships do not pay state unemployment taxes. Generally, that's the default. However, again, these are case-by-case scenarios, and there's exceptions to these rules. What about payment via 1099? So another option for paying yourself is having the LLC hire you as an independent contractor. You're still responsible for paying self-employment taxes, and you must follow the rules for independent contractors, which right now the IRS is cracking down on heavily. Now, let's talk about compliance requirements. Once the LLC is formed, you got to keep that LLC in compliant. What does that mean? It means maintaining a registered agent, filing an annual report, holding an annual meeting and recording minutes of that meeting, renewing business licenses and permits, withholding, reporting, and permit, and payroll tax requirements. Like, let's say the LLC now has an employee, you have to set up a payroll account. If there are changes to the LLC, you have to notify your state and possibly do an amendment for that LLC. So all of these and more are ways that you want to your LLC compliant. And again, you can partner with a reputable filing company such as our company, CorpNet, that could do all of this and more for you. Now, we have a bunch of helpful resources that I encourage all of you to come and visit our site at www. You can see all of the tools that you get to have at your fingertips when it comes to starting a business, keeping a business in compliant, managing a business, and expanding a business. I also have a blog whereby we update it 3 times a week, whereby you can get timely content as to how to run your business, how to expand your business, and much more. For those of you who are listening in, and let's say you're a business professional or you are a serial entrepreneur whereby you want to start offering our services to your clients, we have an amazing program where you can partner with us and start offering business incorporation, LLC filings, sales tax registrations, and compliance to your clients. It's your brand, your logo, while we do all the work. And with that said, I'd like to open it up to Q&As. I want to thank you again for this amazing opportunity and for all of you who listened in. Cody, back to you.
All right, so everyone should be able to see us right now. All right, so the first question we have, let me pull it up, is what is the difference between an LLC, a C Corp, and an S Corp? Can LLCs become an S Corp with time?
Great question. So the difference between a C Corp, S Corp, and an LLC is a C Corp is the most formal type of business entity there is. The owners of that C corporation are termed the shareholders of that corporation. And the shareholders in turn elect a board of directors who in turn elect officers. So lots of requirements in running a corporation. However, it's the most formal type of business structure, and it's going to give you the maximum amount of liability protection and asset protection. An S corporation is not a business entity. It's a tax designation that's given to either a C Corp or an LLC. So if a C Corp, with a C Corp, by default, shareholders of the C corporation are taxed once at the corporate level where the corporation reports a profit. And then when the corporation distributes out dividends to the shareholders are taxed again. Thereby the concept of double taxation. The corporation is getting taxed once on the corporate level, and then once it pays out shareholders, the shareholders are getting taxed again. So this is where the S corporation comes in that where the shareholders of a C corporation want to avoid double taxation, they will elect for that corporation for tax purposes in the eyes of the IRS to be viewed as an S corporation. So an S corporation is really a C corporation with a tax designation that's given by the IRS to that C corp to be treated as an S corp. And once it's treated as an S corp, the IRS looks upon that C corporation as a pass-through tax entity, meaning that corporation is not subject to double taxation anymore. All the profits and losses flow through and are just reported once on the shareholder level, thereby avoiding double taxation. So Again, a C Corp is an entity in itself. An S Corp is a C Corp that elects to be treated as a pass-through tax entity, and it's given an S Corp designation. An LLC, on the other hand, is another formal type of business structure that gives you personal liability protection, asset protection, without all the liabilities and without all the formalities that are often go with a corporation. So with an LLC, if somebody wants to form an LLC, it's typically that business owner who wants minimal formalities, minimal paperwork. However, they may want to be on payroll. So rather than forming a corporation and having all those formalities, they form an LLC and have that LLC be taxed as an S Corp so that they can, as members of an LLC, take paycheck as a reasonable salary. And on top of everything, in answer to your last question, let's say you formed an LLC, but then over time, you say, you know what, I really want to become a corporation because my business is growing faster and there's more liability within the business. An LLC can convert over time, and you can convert that LLC into a corporation. Or if you're a corporation, you can convert it into an LLC. The only requirement is that it be recognized by the state. So if the state offers conversions from going from a C Corp to an LLC or an LLC to a C Corp, then you can do a conversion. Alternatively, if the state doesn't offer it, then you would basically close the LLC and form a corporation. I hope that answered your question.
I think it answered that question and more. So for the next question we have, it's actually very pertinent to a lot of our SCOR viewers. They're working from home, running an online website. So how do you set up an LLC for a website hosting sites? How does that work with a home address?
Very, very, very similar. I mean, you can run your business anywhere. It doesn't have to be that you have an actual storefront, a business storefront. You can form an LLC and have your home address be the business address of the LLC. I would encourage you to and caution you against that. And use a reputable filing service such as our company that not only can form the LLC for you, but can offer you a business address and a registered agent address for the LLC, and still allow you as a business owner to conduct your business from your home office. And the reason I say this is that although there are no requirements against you, using your home address as the LLC's, business address or the registered agent address. We're saying to use a commercial agent's address, such as our company's address or our business address, because it provides a layer of privacy for you. All of a sudden, you don't have people coming down and knocking on your door, serving you with legal documents. So it adds a layer of privacy. But the answer to that question is yes. You can form an LLC anywhere from your home office, pretty much anywhere in the world.
All right. And so the last question that we have is, what are the pros and cons of an LLC during an initial startup, and is it the best option?
Again, that's something that you need to discuss with your accountant or lawyer. I cannot comment as to the legalities of what is the best option in a particular situation. I can only guide you and give you the pros and cons. Generally speaking, as a small business owner who's starting a business, whether online or not online, if you're looking for personal liability protection, if you're looking for asset protection, if you're looking to have credibility, and in the eyes of people you deal with as your clients and vendors, however, you don't want the formalities, but you want to have an established type of business structure whereby people view you as an established source, then I would encourage you to look into the LLC. If you're looking at having the ultimate amount of formalities, don't mind formalities, want to, from the get go have plans to possibly, get acquired, then you may want to opt for a C corporation or an S corporation. It really boils down to how much formality you have tolerance for, whether you want to pay self-employment taxes and take a draw, or whether taxes are going to impact you heavily. And in those cases, I would definitely recommend any of you to consult with your accountant or financial advisor before you decide what type of business is best for you. In addition to that, we have a great online tool, which is called our Business Structure Wizard, which has been created by attorneys and accountants. And you can go onto our website and log into this wizard and answer a few questions, and the wizard will guide you as to what the best business structure would be for your particular business and in your particular situation.
Perfect. So that is the last question we have time for today. I know that we only got a few in, but that tends to happen with subjects like this, where the questions and answers can be so broad. So if we weren't able to answer your questions, I do have a few options for you. First, we will be sending a link to the slide deck and the recording in a post-event email. Also, you can find all of Nellie's information here on this slide provided, and you can use that contact information to reach out if you have any further questions about today's subject. You can also reach out to your SCOR mentor, and they can help you with any basic business needs. If you're not working with a mentor, then you can find one by going to this link right here. You can also find our previous webinars. I believe we also have previous webinars with Nellie using the SCOR free workshop link right there. And just like everything else at SCOR, those are free. So finally, I'd like to give a very special thanks to Nellie for her amazing presentation. Thank you so much for your time and sharing this valuable information with the SCOR audience today.
Thank you again to all of you. Thank you, Cody. Thank you to everyone who listened in on this webinar. Again, if you have any questions or would like assistance from CorpNet, reach out to us. We can be visited online at www.corpnet.com. You can pick up the phone and dial 1-888-449-2638. We have live experts on the phone, online, waiting to assist you. You can even go online, and a live chat expert will be able to assist you with all of your business inquiries. And for those of you who are thinking about partnering with us, visit us and check out our partners page and partner with us and start increasing your revenues and attracting more clients. But again, visit us at www.corpnet.com. If we have not answered your questions, you can send us an email to info@corpnet.com. We're also all over social media. You can link to us on Facebook, on Twitter, on LinkedIn, on Google. So thank you again. I really appreciate the opportunity, and I wish every one of you a very safe and blessed day.
Perfect. And with that, we'll go ahead and close out today's webinar. Take good care, and we look forward to seeing everyone next time.